This week, everything is on the line. Two of the world's biggest companies, Tesla and Netflix, are about to reveal their earnings, right as a new wave of U.S.-China trade tension threatens to shake global markets. The stock market has been swinging wildly for 5 straight days. The government is still shut down, and the next move from Washington or Beijing could decide whether this bull market keeps running or collapses under its own weight. Investors are nervous. Traders are holding their breath. Because everyone knows the same truth. When pressure builds this high, something always breaks. And this time, it's not just about numbers on a screen. It's about two global powerhouses facing off in an economic storm, and a market that's already on the edge. So as Tesla, Netflix, and Wall Street brace for impact, the real question isn't whether this week will move the market. It's whether it will change it forever. Let's break down what's really happening behind the scenes, and why the calm you're seeing right now might be the most dangerous part of all. For 5 straight days, the markets have been whipsawing. Up one moment, down the next, like investors can't decide whether to celebrate or panic. By Friday's close, the S&P 500, NASDAQ, and Dow Jones all managed to finish in the green, but just barely. That's not confidence. That's exhaustion. Behind the scenes, the economy feels like it's running on fumes. The U.S. government shutdown is now stretching into its 3rd week, and key economic reports are disappearing from the calendar one by one. Import prices, delayed, retail sales, missing. Even unemployment data is going dark. And while Wall Street scrambles to make sense of incomplete information, Main Street is flying blind. Investors are desperate for direction, and they're about to get it. Because this week isn't just another round of earnings calls. It's a showdown between corporate optimism and global reality. Tesla and Netflix, two companies that shaped entire industries, are about to reveal whether the engine of American innovation is still running or starting to sputter. But that's just the start. Behind the earnings headlines, there's a bigger problem brewing, one that has nothing to do with profits and everything to do with politics, power, and pressure. And it begins with a war that's no longer just about trade. It's about survival. Every quarter, Wall Street holds its breath for earnings season, but this week feels different. Because the companies reporting now aren't just businesses, they're barometers for the entire global economy. At the top of that list, Tesla and Netflix. Two completely different worlds, one driven by machines, the other by media, yet both facing the same brutal reality, a slowing global economy, rising costs, and a trade war that could rewrite their future. For Tesla, the pressure couldn't be higher. China remains one of its biggest markets, but with new export restrictions and tariff threats flying between Beijing and Washington, Tesla's supply chain has turned into a minefield. Every part, every shipment, every component could suddenly cost more tomorrow than it did today. Investors want one thing from Elon Musk's team, proof that Tesla can keep growing when the rules of global trade keep changing. And then there's Netflix, the giant of streaming. It once dominated entertainment. Now it's fighting off dozens of rivals, shrinking consumer budgets, and slowing subscriber growth. But this quarter, Netflix isn't just reporting numbers, it's reporting confidence. If streaming can't stay strong while people cut costs everywhere else, what does that say about consumer health? Add in Intel, Coca-Cola, and Lockheed Martin, all reporting this week, and you get a full picture of how America's industries are holding up under stress. This isn't just an earnings week, it's a stress test for the global economy. And while companies are trying to sound optimistic, the backdrop couldn't be darker. Because the trade war that's fueling all this uncertainty just hit another flashpoint. And this time, even the people starting it are calling it unsustainable. Just when investors thought the trade war couldn't escalate any further, it did. Beijing rolled out a new wave of export controls, restricting shipments of products that contain even trace amounts of rare metals, the kind critical to EVs, chips, and batteries. And in response, former President Donald Trump took to Truth Social with a familiar threat: a 100% tariff on all Chinese goods. Then, just days later, he walked it back, saying the move was unsustainable. That single word, unsustainable, might be the most honest thing anyone said about this entire conflict. Because right now, it's not just about trade anymore, it's about economic survival on both sides. Every time Washington squeezes, Beijing retaliates, and vice versa. Investors call it a standoff. Analysts call it strategy. But the truth? It's economic whiplash. In the last 2 weeks alone, we've seen rare earth stocks soar, then crash as investors try to predict the next move. Trump accused China of economic hostility after Beijing stopped buying U.S. soybeans, a gut punch to American farmers. Then came another post, a warning that the U.S. might stop importing Chinese cooking oil in retaliation. Each headline hits like a thunderclap. Each statement shakes the markets. And while both sides trade punches, investors are stuck in the middle, watching billions of dollars shift overnight on a single tweet. The irony? The longer this drags on, the harder it becomes for either side to step back. Because now, it's not just about policy, it's about pride. And when politics collides with economics, there's only one direction markets tend to go: down. But this conflict doesn't just move stock prices, it's reshaping entire industries. And nowhere is that clearer than in the world's oldest safe haven, gold. When investors get scared, they run to safety. And right now, that means gold. For 9 straight weeks, gold prices have climbed, hitting an astonishing $4,140 per ounce, the highest in history. But that might just be the beginning. According to analysts at J.P. Morgan, if foreign investors shifted even 0.5% of their U.S. assets into gold, prices could rocket past $6,000. That's not speculation. That's fear, measured in ounces. Every time Washington and Beijing clash, gold gleams a little brighter. It's the one thing people trust when everything else looks unstable. But while gold is surging, oil is doing the exact opposite. Prices have fallen for 3 weeks in a row, with Brent crude down over 2% and WTI dropping almost 3%. Why? Because supply is flooding the market faster than demand can keep up. OPEC Plus, led by Saudi Arabia, has been ramping up production, trying to reclaim market share. Oil tankers are now carrying over 1 billion barrels at sea, the most since the pandemic. And with a new Israel-Hamas ceasefire easing regional tensions, oil faces yet another blow. Peace means more supply. The result? A market sending mixed messages, one asset screaming panic, the other whispering complacency. It's the kind of contradiction that keeps traders awake at night. Because when gold and oil move in opposite directions, it usually means one thing: nobody knows what comes next. But there's one new policy move that could add fuel to the fire, one that hits the real economy in a place few expected: trucks. And the ripple from that decision might hit every corner of global trade. As if the markets weren't already on edge, the White House just threw another wrench into the machine. On Friday, the administration officially approved a 25% tariff on medium and heavy-duty trucks imported from overseas, a move that's set to take effect on November 1st. That means everything from box trucks to 18-wheelers built outside the U.S. will instantly cost more to buy, ship, and sell. Even passenger buses will face a new 10% import tax. Truck manufacturers like PACCAR and Volvo have already pushed back, warning that the rule could disrupt production and squeeze supply chains just as the economy tries to stabilize. And here's the kicker. This new tariff wave comes on top of the existing U.S.-China tensions that are already driving up material costs. It's not just about trucks. These vehicles move everything, from raw materials to food to the electronics we use every day. When truck prices rise, transportation costs surge across the board. That means inflation could quietly creep back into the system just as the Federal Reserve struggles to contain it. And investors know it. Every new policy headline feels like another spark in a room full of gasoline. The government calls it protection. Businesses call it pressure. But economists? They're calling it what it is, a supply shock in slow motion. And the timing couldn't be worse, because the next few days will decide how this all unfolds. Inflation data, corporate earnings, and global trade all hitting at once. Which brings us to the most critical moment of all, the week ahead, where everything could change. The next few days could define how the rest of 2025 and maybe even 2026 plays out. On the surface, it's just another earnings week. But beneath the charts and headlines, every number, every report, every word from a CEO or government office now carries weight far beyond Wall Street. The Consumer Price Index, one of the most important inflation gauges, was delayed due to the government shutdown. Now it's finally set to drop on October 24th. That means for weeks, investors have been flying blind, guessing whether inflation is heating up again or cooling down. The Fed can't comment, economists can't forecast with confidence, and markets are stuck holding their breath. Meanwhile, the Federal Open Market Committee, the same body that sets interest rates, enters its quiet period ahead of its late October meeting. No statements, no guidance, just silence. And in that silence, the markets are left with one thing to cling to: earnings. This week's lineup reads like a who's who of the American economy: Netflix, Tesla, Intel, Coca-Cola, Lockheed Martin, and AT&T. Each from a different sector, each telling part of the same story. How strong is the U.S. consumer? How healthy are supply chains? And how much longer can this fragile balance last before something snaps? For now, optimism remains, but it feels forced, fragile, almost rehearsed. The kind of calm that makes veterans nervous because they've seen it before, right before the storm. By the end of this week, we'll know whether this market is still holding strong or starting to unravel. Because the data might move stocks, but the tone, the emotion, will move investors. And that brings us to the final question. What happens when chaos meets opportunity? Every market storm feels different while you're living through it. But when you step back, the pattern is always the same. Uncertainty rises, confidence fades, and somewhere in that chaos, the next opportunity quietly begins to form. Right now, the world's two largest economies are locked in a standoff that neither can afford to lose. Companies like Tesla and Netflix are caught in the middle, balancing innovation, politics, and profit on a razor's edge. Oil is falling, gold is surging, and investors everywhere are asking the same question: is this the breaking point? Maybe it is, or maybe it's just another test. The kind that shakes out the impatient and rewards the prepared. Because history has shown that markets don't reward fear. They reward resilience. Every crash, every correction, every so-called end of the market cycle has always been followed by something bigger. Not instantly, not easily, but eventually. So, as headlines scream and charts swing, remember this: chaos isn't the end, it's the reset. It's the moment when the next wave of winners starts to emerge. By the time the dust settles, we'll see which companies adapted and which couldn't keep up. And when that happens, the people who kept their heads, who planned, not panicked, will already be one step ahead. So don't just watch the storm, learn from it. Because this week might not break the market, but it will reveal who's strong enough to survive the next one. Bookmark this video, come back after the earnings drop, and see how it all unfolds, because history's next chapter might already be writing itself.